Hello friends, this is Jimmy Singh, broker owner of Supermax Realty, 647-961-2639, or you can reach me at www.supermaxrealty.ca. So friends, in today's video, I would like to discuss top 7 things you should know about financing your cottage in Ontario. Whether you're buying in Muskoka, Kawartha Lakes, Wasaga, Georgian Bay, Blue Mountain, or maybe close to London like Grand Bend, or in any other small part of Ontario. So friends, after buying your own primary residence or a home, cottage ownership is often the highest on the wish list for many of the Canadians. And in fact, many of us dream about our weekend retreat to escape busy city life and make memories with our family and kids, or maybe, enjoy a peaceful retirement. So, in this short video, I would like to discuss what different lenders and banks look at, what is the criteria to own a cottage. So, first thing is seasonal cottages. They are really hard to finance, and typically if you see my previous videos about the cottage, I explain the difference between type A cottage, type B cottage. So the difference is, friends, type A cottage is typical like your residential home, and type B properties are lacking basically standard heating or year around access. So the question the banks ask is the cottage winterized? And typically type A cottage are what we call all season cottages, where basically they have furnace, boiler, subheat, flooring as well. And basically they are on the permanent foundation below the frost line. And if I talk about type B, which we call seasonal cottages, they are not like a second home. Mostly people go for vacation there, and they are not built on solid foundation. So they are basically on what we call a floating foundation, which is like concrete rocks or some kind of a piling there, right? And mostly they rely on wood burning stoves to heat such kind of homes or trailers. So as I said, most banks or lenders, they're kind of reluctant to finance type B cottages. But yes, we can do it, but the down payment has to be substantially greater. I talked to one of my friends working at a blue bank, and he was saying you're looking like 30 to 35% down to finance type B cottages, which are seasonal. And for A type seasonal cottages, all season cottages, you can do as low as 10%, or for 20% down, you can buy type A, which is all season cottages. And how can you refinance, or how can you finance these type of properties? So I have noticed in past like 15 years, some of my clients, they just took equity from their house via home equity line of credit against their primary house. So if their house is paid off, they just take line of credit and basically apply towards a down payment, and rest can be financed. And the benefit of HELOC or home equity line of credit is you just pay interest. So you are not paying principal. And one thing you have to note is HELOC or home equity line of credit, it carries a higher interest than your mortgage. So just keep in mind, and obviously try to pay it as soon as possible because you're not paying any principal, right? And obviously you can also use a home equity line to buy a vacant piece of land. So check out my previous video I recorded earlier this year about things to look for buying vacant piece of land to build your cottage, from scratch. And other point you have to keep in mind is waterfront cottages sometimes can be a challenging situation with the lenders to finance, because bankers by nature, they don't love too much proximity to the lake, because there's a lot of risk for the people who live by shorelines. Like in spring times, they are more prone to flooding, and then obviously they have waterborne parasites or erosion of the sand close by. So these factors the bankers believe could affect the future value of the property, and it will hamper your ability to pay the lenders, right? So you have to prove to the lender that the water is safe, and you basically agree to mitigate any risk for flooding or erosion if you're close to waterfront. And another thing you like to note is sometime I met a couple of people. They said they're looking for a timeshare in Georgian Bay or those kind of areas where they sell you these timeshares. Banks, most of the times they don't finance any timeshare. So I think the benefit is you just buy proper type A or type B kind of cottage. The benefit is you can even pass down to your future grandchildren or children, right? So just keep in mind, timeshare cottages mostly banks don't finance. And typically I see people take a mortgage, or they take a basically line of credit, or they take a mix of it, right? And you can actually take 80% of the value of the house to buy the cottages. So let's say if you have a paid off house which is worth $500,000, so 80% of 500,000 is 400,000 that you can tap. So you can either take home equity line or refinance, take the money and put 20-30% down and buy your cottage. Just keep in mind, for type A cottages, your interest might be a little bit higher as compared to normal mortgage, which you seek to buy a residential house in a city like Kitchener-Waterloo, Hamilton, Toronto, London. And it might be like 10 to 20 basis point more interest as compared to buying a residential house. So let's say right now, interest is, let's say, 1.69 for fixed. So when you're looking to buy these kind of type A cottages, all season cottages, you're looking to pay 10 to 20 basis point more for the lender to mitigate the risk, right? And some lenders, I know, they actually cap the maximum mortgage amount to lend for a second home. So check with your bank, and I see everybody is different. And then I spoke with another friend who works for a Red Bank, and he was saying we can get you second primary residence at 10% down. So it really depends how they structure the deal. I have seen sometimes they put some kind of a blanket mortgage on your current existing home, and basically that is kind of a collateral to mitigate their risk, right? And same thing, with the B kind of cottages, they said they need at least 30-35% down because they are seasonal cottages. There's no heating, and there's more risk to the lender, because if it goes power of sale, it will take them more time to sell the house. And at the end of the day, guys, when you basically looking to purchase your cottage, it should be determined based on what you call combination of your budget and proximity to primary residence. Because sometimes it seems tempting and kind of a romantic thing that you are driving 3-4 hours down the line, but I find mostly people are okay driving like an hour or hour and a half. Because if you live in London, I find a lot of clients, they are buying in Grand Bend area, which is 40 minutes away from North London. So I have relocated a couple of people there as well. So and because there's a nice Lake Huron, so basically you are just beside Lake Huron there. And some of my clients over the years, they went to Georgian Bay west part, which is Blue Mountain, Collingwood, Wasaga. And some of the clients from Toronto, they basically relocated their second home or business to Muskoka or Kawartha Lakes, right? So if you are looking to buy in these cottage towns, give Supermax team a call to discuss more detail about the prices and what are the different options. Even if you're looking to get a financing, I have a couple of good bankers who I can recommend to you. And other points, in my opinion, is basically if you rent out your cottage or you use as a recreation property sometimes as a rental, you need actually to have a lease to show to the bank. So basically rental property mortgage are a little different as compared to owner occupied, right? And minimum you need is 20% down if you are buying for renting purposes. And other thing is, if it's not owner occupied, your interest would be higher for rentals versus owner occupied. So those are all considerations you have to keep in mind. And the good part is, if it is a rental and you have a lease in hand, they will do an appraisal there, and lender might be able to use the income from your rental property to offset some of the ratios to qualify for a bigger mortgage, right? And another thing is, if it is a property close to lake or riverfront, the bank want to make sure the drinking water from there has a good water filtration system in place, and the water is potable. Because I see sometimes lender do hold back some monies, and they make sure, they tell the lawyers to make sure that you have one installed, the good water filtration system. And as I said, lenders love if it is year around access, right? So all season properties are easier to finance than 3-season properties. That is the way the lenders see the risk, right? And I think that's about it, guys. If you have any questions regarding buying a cottage anywhere in Ontario, give team Supermax a call. I've been helping my clients buy recreational properties for last 15 years. You can reach me at 647-961-2639, or you can visit my channel Real Estate Edge with Jimmy Singh. If you haven't subscribed yet, share your comments and thoughts, and thanks for watching. God bless you.